So read the illustration. Everybody go through this illustration. Miss Preeti, a social worker. She owns a house property at Vashi, New Mumbai, which is let out at an annual rent of 25,000. Okay. And she incurred the following expenses in respect of the house property. So municipal taxes paid by Miss Preeti is 1,000 rupees. Okay. So this is the detail of house property given. In the next slide, we will have to see about other income details. Interest on bank deposit 12,500. Dividend from Indian companies. So this is the detail of dividend from Indian companies given 500, 750, 1,500. Okay. And she paid 25 for collection charges and 2,000 as interest on loan borrowed for purchase of window enclosures. Okay. Agriculture income from land in India 47,000. Dividend from foreign company 14,500. Compute the gross total income of Ms. Preeti for assessment year 2021-22. Here word uses gross total income. So in this question, if other heads of income are also there, that also we will have to consider, because here word uses gross total income. In the last question, if you will remember, their word was used income from other sources. So in that question, we had to solve only income from other sources, calculate only income from other sources. But here we have to find out the gross total income of Ms. Preeti for assessment year 2021-22. Okay, so we will have to take into consideration the total question. So see, Ms. Preeti is having a house property income, so it will come under which head of income? Income from house property. So we know how to calculate income from house property. Okay. Then we will have to see the following list of income. It will come under which head of income, that we will have to first understand, and then we will have to solve the illustration. The interest from bank, it will come under which head of income? Interest from bank. Income from other sources, dividends, other sources. Agricultural income from land in India, it will be taxable under which head of income? Agricultural income from land in India, it will be taxed under which head of income? Okay, anybody can tell. Income from agricultural land in India, which head of income? Exempt from tax. No, already we have understood. No, it is exempt from tax. So income from agriculture and income from India is exempt from tax. Dividend from foreign company, income from other sources. Okay. Now we can solve this illustration. So in this question, two heads are there. First is income from house property. Income from house property. So income from house property, we know how to calculate. What we will consider? First, we will have to calculate the GAV, NAV, then we will get the income from house property. So how we will calculate the GAV? First, we will have to take the municipal rent and fair rent. If you will see the question, here municipal rent and fair rent details are not given. Okay, municipal rent and fair rent details are not given. So we will have to assume it as nil. So if municipal rent and fair rent are nil, reasonable let out value will be nil, no? Because reasonable let out value is the higher of municipal rent or fair rent. Okay, if you have done the income from house property revision, then you would reasonable let out value or expected rent is higher of municipal rent or fair rent, but it is nil, so RLV will automatically become nil. Okay, so municipal rent is nil. Here working is also given, so you can check this also. Municipal rent is nil, fair rent is nil, so automatically reasonable let out value will be nil. Actual rent, actual rent is how much? Actual annual rent 25,000. Actual annual rent is how much? 25,000. So GAV will be higher of RLV or actual rent. So nil and 25,000, which is the higher one, 25,000. So GAV will be 25,000. Less what we have to do? Less standard deduction. Correct. Yes. Everybody tell after GAV what step will be there. You are revised no income from house property. This is the GAV we have calculated. Municipal rent, fair rent, a reasonable let out value we will get. Reasonable let out value and actual rent, whichever is higher, will be the GAV. After that, what will be the step? Yes. You can put your answer in the message box. After calculating GAV, what will be the next step? Okay. After GAV, we will have to reduce the municipal tax. No? Municipal tax paid. Municipal tax paid is how much? Municipal tax paid is 1,000. So GAV minus municipal tax will be GAV minus municipal tax will be NAV, net annual value. So GAV minus municipal tax, net annual value NAV. How much? 25,000 minus 1,000. Less standard deduction. Standard deduction at what percentage? For a house property, what is the standard deduction rate? Standard deduction for house property. Standard deduction for house property 30 percentage. 30 percentage of NAV. Okay. So 30 percentage of NAV. So income from house property will be 24,000 minus 30 percentage, that is 16,800. Okay, so first head we have completed income from house property. Income from house property. Now next is income from other sources in this question. That we will have to calculate now. So that is very simple. Interest on bank deposits. Dividend on shares of Indian company 500 from Lazarus Tube, 750 from Amarnath Textile and 1500 from Bindal Agro Limited. Three dividends Ms. Preeti is receiving. So dividend from Indian companies. So dividend from Indian companies. A dividend received from Indian companies 500, 750, 1500 total. Okay. But here one statement is given. See, she paid 25 for collection charges and 2000 as the interest on loan borrowed for purchase of Bindal Agro shares limited. Means what? So she is receiving 500, 750 and 1500 as a dividend, which will be income. But at the same time, she is incurring expenses also. So we will have to give the benefit for the expenses. So how we will calculate here? Simple logic. Net income should be taxable. Okay. So 500 will be dividend from L&T, Lasarante, 750 from Amarnath Textile, and 1500 from Bindal Agro. Okay, this is the income less 25 collection charges she is paying, which will be allowed as a deduction, and 2000 interest she is paying, which will be allowed as a deduction. Because net amount should be taxable. No? So 25 minus 2000. So what will be the net amount of dividend taxable? Logical, no? If you are earning 1000 rupees and you are incurring 500 rupees as an expense for that earning, so only 500 should be taxable. 1000 should not be taxable. So same logic we have applied here also. She is receiving dividend 500 plus 750 plus 1500. 2750 dividend she is receiving. Okay, but simultaneously expenditure is also incurred for earning that income. That is the 25 plus 2000. This expenditure we will have to reduce and only net income should be taxable. Okay. So 2750 minus 2025. So only 725 will be taxable as a dividend income, not the total income. Okay. Because if you are earning 1000 rupees and for that you are incurring 500 as an expense, only actual income will be taxable 500, not the revenue. Income will be taxable. Okay, difference between income and revenue is the gross receipts and income is the net amount which is left after expenditure. Okay, under Income Tax Act, actual income should be taxable, not the gross income. Okay. And agriculture income from land in India is an exempt from tax. Agriculture income from land in India, it is an exempt income. exempt income or exempt from tax. Exempt from income tax. And dividend from foreign companies taxable. Dividend from company 14,500. What will be the income from other sources? 12,500, 725, 14,500. So gross total income will be gross total income of Miss Preeti will be if you will add the income from house property and income from other sources, we will get the gross total income 16,800 plus 27,720. So gross total income of Miss Preeti is 44,525. Understood everybody this illustration how to solve? Any confusion is there?